the upside as we head into the next couple of weeks?
First of all, I think, going by the reaction of the market today in the wake of the favorable exit polls, it seems a lot of this positive news is already factored into the market. If you notice how the Indian market moved up and continued to move up, even in the face of earnings downgrades that were coming through all across January and February, it obviously means that the market has been significantly re-rated. It's the valuation that has moved up significantly, both compared to its own history and in relation to its Asia ex-Japan peers. So this re-rating obviously was partly due to the sentiment boost that was coming across as a consequence of the continuous feedback that we were receiving from on the ground, that the ruling party is likely to do well in some of these key battleground states. So I think that partly explains why the market is flat today, even in the wake of these positive exit poll results. So after the results are out on Saturday, while initially there could be a, kind of a sentimental euphoria if the ruling party really does well, because it would obviously indicate a continued reform momentum and the continued ability of the government to cut down on fiscal deficit and expand on fiscal discipline. I think then the focus will again come back into two things. Number one, how the earnings environment develops in India, and secondly, the global scenario, which I think the Indian market has somewhat ignored in last few days.
Manish, I want to talk to you about the risk reward in just a bit. In the meantime, we should also pull up Reliance Industries, the intraday for our viewers, because we were talking about this major move in oil and gas, upstream particularly. Even, private sector giant like RIL, there's some interesting trade going on there as well. From the lows, the sharp recovery on Reliance, it's helping the market as well. So just wanted to put that little piece of information out there. That's what I'm talking about, V-shaped recovery on Reliance. Anyway, so Manishi, coming back to the point that you were just making, is the risk reward now favorable towards the Indian market?
I think, in the short term, I would possibly expect some correction in India. In fact, the valuation premium that Indian market trades at compared to Asia ex-Japan is almost about 50% right now. I mean, on a forward PE basis, India is approximately 17.5 to 18 times, while the average of Asia ex-Japan is about 12 to 12.5. So that valuation has to compress. That valuation premium has to come down. That can obviously happen in two ways, either by India correcting or by India's staying where it is while the other markets in Asia outperform. But, the one implication of this is clear, that the valuation premium has to compress. So at least on a relative basis, I would expect some correction in India. I don't think it'll be very severe, but any correction would obviously provide a better opportunity both to the foreign portfolio investors and the domestic institutions to re-enter.
So, we keep talking about the domestic market, but one thing we're ignoring is the global risk, right? I mean, how high is the global risk right now with the way the dollar index and the bond yields have been surging lately?
Right. The DXY and the bond yield surged right after the indications we received from the Fed that there could be an imminent rate hike in March. In fact, we currently believe that in 2017, there could be 3 Fed rate hikes, followed by possibly 4 in 2018. That's our global economists' belief. And the first one in 2017 could be as early as March. So I think earlier most economists were arguing for a May rate hike and possibly just about 2 in 2017, but that outlook is clearly changing. So that was, at the back of this, expansion in DXY and the increase in the bond yields that we have seen. So, that's one of the reasons why over the last 1 or 2 weeks, the Asian markets themselves have corrected. We saw MSCI Asia ex-Japan at 569. Over the last few days, it's corrected back to about 559 or so. And we think that this might continue for some more time. Secondly, we also have to keep in mind that during this period from March to June, we are likely to have quite a few important European elections. And if the kind of outcome that we saw in Brexit in June 2016, if similar outcomes get repeated, then the concern about the sustainability of the euro, etc., those concerns would again come back. Whenever this happens, we see kind of a reversal of flows back into the safe haven destinations, and emerging markets obviously get deprived of the flows. So that's something we have to watch very closely.
All right, Manishi, then where does your interest lie in individual sectors now?
Right. So in case of India, as I have been saying on this forum, that there are 3 or 4 silos that we like. First are the consumer discretionaries and select few consumer staples, particularly the ones that benefit from rural consumption upturn. As far as consumer discretionaries go, our preference lies for the auto segment, particularly the four-wheelers. The second silo are the private sector banks, particularly the ones that are focused on retail lending, not the ones so much focused on corporate lending. Finally, some select few investment beneficiaries, even though we're still not seeing private investments coming back in a big way. We think that industrials, particularly the deleveraged industrials, and a few cement stocks and maybe a few in the power distribution and transmission space, there are a few pockets like these that deserve investors' attention. So I think that's where we would really focus on as far as our India basket is concerned. And finally, we are not taking our foot off the pedal as far as the Indian IT universe goes entirely. I mean, even though the concerns about the H-1B visa laws, they remain. And, they will possibly continue to impact sentiment on this sector for the foreseeable time horizon. But we also think that after this massive correction that the sector has suffered, the valuations look attractive. And these companies are huge cash generators, which are enabling many of them to enhance shareholder value by buybacks and larger dividend payments.
Okay, so finally then, Manishi, what is your year-end target for the Sensex now, and how much growth do you see from now, say, until the end of the year?
We have a Sensex target of 30,300 by end of calendar 2017, which means, possibly about 6 to 7% from here over, close to a 9 to 9.5 month time span. So, on an annualized basis, that's not really much, maybe about 8 to 9%. Obviously, if the market corrects slightly, it becomes all the more attractive to get into the market, at that point of time.
All right, Manishi.